Hello, good morning, and welcome to another session. As in this video, we are going to be taking a technical dissection of the USDJPY chart together. And since this is going to be a follow-up detail to my previous analysis, where we were able to scoop over 500 pips on the previous publication on this pair, I would like to share some key moments that we had, and this will also give you an idea into how we took advantage of the trading opportunities that we had before diving right into the details for the week. So this was how it started for us last week. We captured this whole situation here where the week started on a bullish note and price action was within that range between the 136.70 level and the 136.200 area. And at this point, we were looking out for trading opportunities either in the form of a breakout or breakdown of that channel. And with the buy stop order above that resistant line, we had our first buy position for the week, which was detailed during our YouTube morning live session on Monday. So we moved our stop loss to secure this position, and at one point we begin to see sell pressure resume around the 136.37.780, and with the identification of a trend line after connecting the series of higher lows, this was the line we were going to be using to guide our trading activity. And during our morning live session, I told us all that a breakdown of the trend line will definitely negate that bullish momentum, and it's at this point we want to be getting ready to sell. So we had a simple structure around the 137.530 to guide this bearish move to the downside, and luckily enough for us, we were able to capture that move, and we continue to ride the move all the way to the downside, adding more positions at the breakdown of key structures that was duly identified during our morning live sessions. So as you can see, price action continued to the downside, coming into our potential TP target for sellers, and at the same time this area was also projected to be an area where if it so happens that price action transitions into a reversal pattern, then definitely we want to be looking out for buying opportunity around this area. However, we had some more sell positions within this area before the buy pressure began, as you can see here. So we had some sell positions. Then at this point, we begin to see a structure here that looks more like a reversal pattern in the form of a double bottom structure. And it was at this point we begin to get ready to buy. And this was what we saw here. We saw our buy position triggered, and it was at this note we closed the last week's trading session on a bullish note. For those who would like to look at this once again on your own, I will be dropping the link to this commentary right in the description box of this current video. And for those who are watching from my YouTube channel, definitely you will be seeing it at the top right hand side of your screen. So with that being said here, let's dive right into the daily time frame, which is where I want us to be looking at giving us a clue into what has been happening in this market since the beginning of this year. And for the sake of time, I will just dive right into the current market structure. As for those who want to see how we got to this point, you might want to watch my previous videos on the USDJPY. So this was the situation we have here since I think the month of February, where we saw price action break out of this trend line, giving us a signal that buyers are still very strong in this market. And remember, if you had been with me, remember we acknowledged the fact that the 131.00 area has been a strong buying niche in this market. So we saw how price action came back to retest the trend line, an area which also had a confluence with that 131.00 area, and we saw how price action transitioned into that reversal pattern here. And a couple of weeks ago, I shared a publication on this one where we were anticipating the validation of that reversal pattern. So we had the neckline situated at the 131 800 area. So we were looking forward to price action breaking out and retesting that structure a couple of weeks ago to give us a signal of a bullish momentum in this market, which exactly happened just as expected. And as you can see here, in the last couple of weeks, we saw this impulsive move that brought price back into the 137.500, an area which has a memory for selling power. As you can see, that level had been a strong selling niche in the past, and as soon as price got into the structure during the previous week, we saw another bearish engulfing candle, which we were lucky enough to take advantage of and rather move back into that neckline at the 131.800 area. Now we are back at a point where price action is likely going to be moving either bullish or bearish at this point. And to further emphasize the confluence around the 131.800 area, here is this bullish trend line you will see on your screen right now after we connected the series of higher lows since the month of March, which further emphasized the level of buying pressure in this market. So with this trend line here, you can see that price action is currently trading around that area. At least in the last couple of days, we saw buy pressure resume just exactly along the trend line, which also shares a confluence with the neckline of that reversal pattern we identified earlier. So at this point in time, you would agree with me that we are at a critical point in the market where anything could actually happen. Now, the next question we want to be asking here is, will the buy pressure that we have been noticing since Thursday and Friday remain in such a way that it incites another wave to the upside, or is it going to lead into a situation where price will break down the bullish trend line and the 133.800 to incite a sell-off in this market? So these are the things we are going to be looking at, and to further get a better perspective into how to position ourselves in such a way that we can catch any of these opportunities, we shall be scaling down into a much lower time frame, where I was able to identify a simple setup that we can use to guide our activities for this week. But before we go into the 4 hours time frame, it is important that we also take note of the fundamental aspect of the market, as this will also give us a better timing on how to position ourselves in such a way that we can catch any potential opportunity. That is one. And then secondly, it helps us to have an idea of what the sentiment in the market is and what majority in the market are looking forward to in order to know how price action will be behaving around the market structure. So with that being said here, I was able to spool out some couple of high impact macroeconomic events which will be affecting both the Japanese yen and the US dollar. So I normally use the FX Street economic calendar, and here we have the first high impact event is coming in today. Actually, later on today, we have the Bank of Japan monetary policy minutes coming in. So it is published a study of economic movement in Japan after the actual meeting. So it's just a meeting giving us a review of economic development inside and outside of Japan, and it also indicates a sign of new fiscal policy. So this is one event majority want to be looking out for, so that to have an informed decision on what to do in this market. Then the next high impact event is coming in on Wednesday, May 10th, and that is the Consumer Price Index, which is released by the US Department of Labor Statistics. And this is a measure of price movement by the comparison between the retail prices of a representative shopping basket of goods and services. Generally speaking, a high reading is seen as a positive signal for the dollar, while a lower reading is seen as negative for the US dollar. Now, the previous data for the month of March came in at 0.4, so there is a general consensus that this last month will be coming in at 0.3%, which is on the lower side compared to the previous data. So we are going to be looking forward to this one too as well. Then the next high impact event isn't coming until Friday, May 12th, and that is the publication from the University of Michigan, which is the Consumer Sentiment Index. So this is a survey of personal consumer confidence in the economic activity. It gives us a picture of whether or not consumers are willing to spend money or not. And generally speaking, a high reading is expected to give us a positive signal. And from the data we have here, the previous data came in at 63.5, and there is a general consensus of 63, which is on the lower side compared to the previous data. So we are also going to be looking forward to what the actual data is. So these are high impact events we are going to be looking forward to this week, and majority in the market will definitely be looking forward to this event, and we shall be seeing the reflection of the anticipation of this event on the chart as price action. So with that being said here, let's dive right back into our 4 hours time frame, where I said we have a simple setup that we shall be using to guide our trading activity for the week. And this was what I was able to come up with on the 4 hours time frame. You can see it's quite a simple setup. We should first of all acknowledge the fact that price action has been bullish since the month of March, as you can see here. So after connecting the series of higher lows, we have this bullish trend line that you can see on your screen right now, which definitely is going to be serving as one of the yardsticks to guide our trading activity for this week. Then the second structure you will see here is the key level sitting at that psychological number at the 135.00 area. You will see, if we go to as far back as the mid-month of April, you will see how this level had been a major determinant of price action. So look at, in the month of April, it was a very strong selling niche before we saw the breakout of this level during the last trading day of last month to incite a bullish signal in this market. However, during the course of last week's trading session, we saw this whole situation where price action dropped back below the structure, breaking down that level and coming back into that demand zone that we have here at the 133.500. And for the fact that price action is unable to break down the 133.500 level in the last couple of weeks is a sign that buyers are very, very strong around this area. As every point in time sellers try to break down the structure, we have seen how buyers are relentlessly negated the selling pressure around this area. And with this whole situation we have here, I'm going to be looking forward to a bullish momentum this week. And to further guide my trading activity, as long as price action remains above that bullish trend line, I will continue to look out for more buying opportunities in this market. Now, we have a key level at the 135.00 area, which actually has been a selling zone for, I think, the last trading day of last week. I want to see a breakout of the structure to give me a confirmation that buyers are finally gathered that strength to break out of that level. So as long as price action climbs above the 135.00 area, and if we are lucky enough, when we scale down to our lower time frame and we begin to see another wave of buy pressure around that area, then this will further give us that confidence to add more position to our existing trade, after which we shall be monitoring how participants in the market will be reacting to the 137.750 area to decide if we are going to be adding more buy position to our existing trade, or we are going to be getting ready to join another sell momentum to the downside. So this is my bullish perspective on the USDJPY for this week. And you all know what I do here. Despite the fact that I'm looking forward to a buy opportunity in this market, it is always important that we also take into consideration the potentials that the sellers have in this market. So for me in this market, for me to sell the USDJPY, What do I want to see from this current market structure that will give me the confidence to open a bearish position? Well, from the whole situation we have here, we have two key structures that we are going to be using to guide that bearish expectation. One is this bullish trend line. That is the first parameter to guide any bearish momentum in this market. And the second one, which is most important, is this demand zone here at the 133.500 area. So I would rather see price action break down the structures to give me a signal that a bearish momentum is likely going to be coming in this market, as price action would have taken out all the buy positions within this demand zone to give us a signal that sellers are finally coming into this market. Now, we would need some confirmation when we scale down to our lower time frame to look out for retest of structures, which further confirms the strength of the sellers here, where we see that buyers are finding it difficult to climb back above that demand zone. Then at this point, we want to be getting ready to be part of that bearish move to the downside. So unless price action breaks down the trend line and the demand zone, we are not going to be looking out for selling opportunities this week. So these are my views on the USDJPY, and be rest assured that I will be with you right in the comment section after monitoring how participants in this market will be reacting to this current structure during the early hours of the new week. I do hope this video has been of immense help in making your personal decision on the USDJPY for this week, and if it did, kindly support this project by clicking the like button. You might also want to follow me on my TradingView platform at DarkSherry. The spelling is right here at the top right hand side of your screen, so that you can be part of the daily commentaries I normally share in the comment sections of all of my videos. Thank you for watching this video, and I look forward to seeing you right in the comment section on Monday morning as we get prepared for the new week. Do have a wonderful evening, everyone. Bye-bye.